Chapter 7, Tax Credits. In this learning objective, we'll be applying the special rules for the American Opportunity Tax Credit and the Lifetime Learning Credit. The tax law contains a number of provisions that are intended to reduce the cost of education for taxpayers. Educational credits represent the last of these provisions covered in the textbook. We've already discussed how scholarships are excluded from gross income. We discussed employer-provided education assistance plans, tuition reduction for school employees, the deduction of education expenses, student loan interest deduction. We discussed qualified tuition programs, Coverdales, and the tuition deduction is currently expired. So in this chapter, we'll go over 2 tax credits available to people paying higher education costs. The first is the AOTC, the American Opportunity Tax Credit. The American Opportunity Tax Credit is an education credit available to help qualifying low-income and middle-income individuals to defray the cost of higher education. The AOTC is a credit for students in their first 4 years of post-secondary education. The AOTC may be claimed for the expenses of students pursuing a bachelor's or associate's degree or vocational training. To be eligible, you have to meet all of the following criteria. You have to be pursuing a degree or a recognized credential, enrolled at least half-time for 1 semester during the tax year. You have to receive a Form 1098-T from the eligible education institution. You must have not completed the first 4 years of higher education at the start of the tax year. You cannot claim it for more than 4 years, and you must not have a felony drug conviction. You may also not claim it if you're married filing separate or you are dependent on another taxpayer's return. To calculate the credit, you are able to take 100% of the first $2,000 of qualified expenses paid and then 25% of the next $2,000 for a maximum annual credit of $2,500 per student. For 2018, the AOTC is phased out for joint tax return filers with income between $160,000 and $180,000, and for single head of household or qualifying widower between $80,000 and $90,000. The AOTC is 40% refundable, so up to $1,000 may be refunded to the taxpayer if the credit exceeds the taxpayer's liability. A note on qualifying expenses. Qualifying expenses for the AOTC can be paid on behalf of the taxpayer, his or her spouse, or dependents. Expenses for room and board, non-academic fees, or for expenses not related to the course do not qualify. Qualifying expenses must be reduced by any tax-free scholarships, grants, or other educational assistance. And the tax preparer has to complete that due diligence form 8867 in order to claim the credit, since a portion of this credit is refundable. The other credit that is available is the Lifetime Learning Credit. The Lifetime Learning Credit is a non-refundable tax credit of 20% of qualified expenses up to $10,000. So the maximum credit is $2,000. The Lifetime Learning Credit is available for qualified expenses paid for an education of the taxpayer, his or her spouse, and dependents. It is available for undergraduate, graduate, or professional courses at eligible institutions. The student could be enrolled in just 1 course and still get the credit. There is no limit on the number of years a taxpayer can claim the credit, nor is the credit subject to the felony drug offense restrictions. This credit phases out for married taxpayers with an income between $114,000 and $134,000, and between $57,000 and $67,000 for single head of household or qualifying widowers. It's important to note taxpayers cannot take both the AOTC and the Lifetime Learning Credit for the same student in the same tax year. An American Opportunity Tax Credit can be claimed for 1 student, and the Lifetime Learning credit could be claimed for a different student in the same tax year. So if you're in college and you have a sibling in college and your parents are claiming these credits, they could claim both AOTC on both of you, they could claim lifetime learning on both of you, or they could claim one on one and one on the other. Also, the choice in 1 year does not bind the taxpayer for future years. Taxpayers should claim the credit or combination of credits that provides the best tax benefits. Both the AOTC and the Lifetime Learning Credit are claimed on Form 8863. You also cannot use the credit for sports, games, hobbies, etc., unless it is part of a degree program. You must also reduce qualified expenses by any tax-free scholarships or employer reimbursements before calculating the qualified expenses for the credit. Example, Dave and Val are married filing joint and have 2 dependent children, and they have an AGI of 72,000. Sean is taking 4 credits, which is part-time enrollment, at the City College of Newark. His tuition and fees are $4,200. Corey is a freshman at Tulane. Her tuition and fees are $39,200. Neither child has a felony drug conviction. What amounts may Dave and Val claim as education credits? Well, their AGI for married filing joint is 72,000, which is below the phase-out limits for both credits, so they could take the full amount. Sean may not take the AOTC because he is not enrolled half-time. He is only part-time. So you can take 20% of his $4,200 in tuition. So for Sean, you would take $840 in a lifetime learning credit. Corey is a full-time student, and she qualifies for the AOTC. So she can take the full maximum amount of $2,500.